Two energy IPOs at the Nasdaq this week. Here to talk about that is Tamar Essner. She's an energy analyst with Nasdaq Advisory Services. Thanks for your time.
Thanks for having me.
Well, it's very rare this year to talk about IPOs and energy IPOs in particular. So why did we see two companies, do you think, come to the market now?
I think there's increasing confidence that oil prices have finally stabilized. So even if there's not a lot of conviction that we're going to move steadily higher from here, we finally have found a floor and we're not going to retest $20 or $30 oil. And that's enough to inspire confidence for companies to come to market and for investors to back them.
We had one company, Extraction Oil and Gas, that priced at the high end, traded higher. We had another company, Mammoth Energy, that priced at the low end and then retreated. Will that discourage some companies in terms of the market reaction?
I don't think so. I think that the interesting thing about where we are in the energy market right now is that many companies are able to earn returns that are similar in a $50 range, oil price range, that they were able to earn when oil was at $100 a barrel range. So I think that shows that there really is a lot of appetite, especially for the E&P companies, potentially not as much for the oil services companies, but most of the companies that are in the pipeline are of the producer variety.
And in terms of what is in the pipeline, how does that look in terms of potential companies, maybe not by the end of the year, but certainly as we go into 2017, if we do have that stability in oil prices?
Sure. I think we're cautiously optimistic about the outlook. There are 10 companies right now that have active S1 registrations on file with the SEC. So to your point, if oil prices stay stable and the market fundamentals continue to remain supportive, we expect that more companies will come to market.
And in terms of price stability, it's always so tricky to tackle that because while oil might stabilize at 50, it's not 60, it's not 70, it's not 80, which we saw several years ago. You made this interesting point about how companies have gotten more efficient in terms of their own profitability and where prices are. Will we see oil prices drift back eventually to those higher levels?
I think over time they will, but we're going to be in a much narrower range. So $80 to $100 oil, I think that's a thing of the past. But in a way, it's a lot less important for companies to see that higher price because they've gotten so much more efficient. And the interesting thing is that so many of those companies are focused in the Permian Basin in the U.S., which is where they've had the most meaningful returns.
Are there any particular areas within energy you think will still struggle in 2017, even with that stability?
Potentially refiners, because they benefit from having oil prices being low because that impacts their margins. So that might be the one area where you'll see some weakness. But certainly the upstream companies that benefit from higher prices or even just stable prices, that should be supportive for them.
What is your best guess with what happens with OPEC next?
It's an interesting question. I think that the recent decision was an important turning point in terms of showing that Saudi Arabia is no longer going to be exclusively focusing on market share. But at the same time, we also heard news that they recently made price discounts to customers in Europe and Asia. So it shows that they're going to continue to flex their muscle as the largest and lowest cost producer out there. So I think that there'll be some impact, but most importantly, it will help to, as we said before, put a floor on oil prices and keep them stable, even if not provide continuous support higher.
Tamar Essner, thanks so much for your time.
Thanks for having me.
I'm Rhonda Schaffler with The Street.